Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 14th of September. Been quite a difficult week, just a 4-day shortened trading week in the States after Labour Day on Monday. We've certainly seen some selling pressure in the technology stocks. Obviously, the Nasdaq has been on an incredible tear over the last few months. It's actually up by 59% since the lows in March. Even so, some air is being let out of the tyres, and there are some concerns that perhaps we're lacking a fresh impetus for the next move in a positive direction. Obviously, we've also got the sideshow of the US presidential elections coming up in November, and of course the ongoing spat between the US and China. All that being said, and on top of that, we've got an oil price which has lurched downwards again, down about 40% now in the year to date, with the supply-demand imbalance becoming more into focus. Even so, main markets in the States remain reasonably positive. In the year to date, the Dow Jones is down about 3.5%, S&P 500 up 3.3%, and despite the recent pressure, the Nasdaq does remain up 22% in the year to date. FTSE 100 still something of a laggard, down 20% in the year to date, although ironically it's not seen some of those falls over the last week due to the weakness of sterling, and of course a lot of FTSE 100 companies have overseas earnings. So turning to next week, with that brittle backdrop in mind, the Federal Reserve comments are going to come into increasing significance. Of course, the last time we heard from the Fed during their meeting, they were basically saying that it was a highly uncertain path to recovery in the States, and with nearly 30 million people in the US now claiming unemployment benefits, any dovish notes will be welcome. In terms of UK companies reporting, probably only two to look out for in terms of the FTSE 100, first one being a third quarter trading update from Ocado. Now here's a stock which remains on a stellar trajectory. In the year to date, the shares are up 80%. It's in something of a sweet spot. It gives investors two bites of the cherry because it's caught somewhere between being a traditional retailer and a hugely innovative tech company as well. So that's one of the reasons, apart from its transformational deals with companies in the States, Canada, Japan and so on, that has pushed it forward. And also being a trading update, one would expect some kind of latest developments on the recently launched tie-up with Marks and Spencer. The other stock to look out for next week is Next. These shares have been suffering, as you would expect during the pandemic, down around 16% in the year to date, although again, having recovered around 79% since those lows in April. Last time we heard from Next, they were estimating full year profits at £195 million. We'll see at the halfway stage how they're moving towards that. Unlikely to get much of an update on the dividend situation, but worth looking out for. But in particular, of course, within that half year, all eyes will particularly be focused on the second part, in other words, Q2 performance. Thank you for watching. Have a great week.